Stock market news: SoFi stock, AI stocks, Beam stock, PANW stock, MCD stock, AAPL stock and LLY stock. Hey there fellow investors and tech enthusiasts, welcome back to another exciting episode of our YouTube channel. To access more videos regarding the latest updates in the stock market news, please click the like button and subscribe. With that said, let's jump right into today's headlines. President Biden has issued an executive order concerning artificial intelligence, marking a significant federal action that is unprecedented in its scope. This order aims to introduce regulations to an industry that has largely operated without strict oversight. One of the key implications of this executive order is that developers of advanced AI models will now be obligated to submit safety test results to the federal government to demonstrate that their creations do not pose a threat to the public. Additionally, the White House will be responsible for creating guidelines for federal agencies to improve privacy protection practices related to AI and machine learning. However, President Biden has emphasized that the responsibility for enacting consumer privacy regulations for the AI industry lies with Congress. The executive order also seeks to standardize the use of AI within the government by streamlining the procurement process for federal agencies to acquire AI tools and hire AI experts and researchers. This is with the goal of preventing a few large corporations from dominating the AI industry. It's important to highlight that while this executive order marks a significant starting point and establishes crucial norms for the AI sector, it primarily consists of suggestions and contains some guidance that the executive branch cannot enforce. As a result, the practical effectiveness of these directives remains uncertain. Furthermore, the influence of the executive order is limited in terms of international AI developers, as it primarily pertains to the regulation of AI within the United States. It's worth noting that the Auto Workers Union has reached a preliminary agreement with General Motors, signaling the conclusion of negotiations with Detroit car manufacturers. Prior to this, Ford and Stellantis had already reached tentative agreements with the United Auto Workers Union. This development comes after a 6-week strike that GM estimated was costing the company $200 million per week. It's important to note that while these tentative deals are in place, they still require approval by the union members. The proposed contracts span 4 years and appear to be significant wins for the UAW, as they secure the largest wage increases in decades for their members. In other news, in the tech industry, Apple is looking to boost its computer sales by introducing a new line of processing chips for its Macs. In line with the Halloween-themed announcement, Apple has named these chips Scary Fast. The Macs equipped with these speedier chips are set to be available next week, and Apple is counting on their popularity during the upcoming holiday season, following a 7% decline in Mac sales during the last quarter. Additionally, Apple is also reducing the prices of some of its computers, with the 14-inch MacBook Pro now priced at $1,599 compared to last year's model, which was priced at $1,999. In the context of rising living costs and shifting consumer preferences, McDonald's has posted impressive earnings. This success is partly attributed to higher menu prices. For instance, at a Connecticut location, a Big Mac combo now costs $18. In the third quarter, McDonald's reported global revenue of $6.69 billion, a 14% increase from the previous year, surpassing Wall Street's predictions. McDonald's CEO, Chris Kempczinski, pointed out that these challenging times actually offer an opportunity for the fast food chain. In the U.S., McDonald's has gained market share among middle and high-income customers who are opting for fast food over more expensive options. However, lower-income customers earning less than $45,000 reduced their consumption of Big Macs in the third quarter, but this decline in foot traffic was offset by the higher menu prices. McDonald's also credits its earnings success to recent marketing efforts and the use of the mobile app, delivery services, and in-store kiosks, which together accounted for 40% of third-quarter sales. Looking ahead, McDonald's plans to raise menu prices in California next year to counteract the impact of the state's increase in the minimum wage for fast food workers to $20 per hour. Shifting to financial news, SoFi Technologies saw its stock rise by 6.9% in early Tuesday trading after Morgan Stanley upgraded the stock from underweight to equal weight. This upgrade followed a decline in SoFi's valuation below the firm's price target. Analyst Jeffrey Adelson's assessment of SoFi's third quarter results also contributed to the more positive outlook. Notably, SoFi's Q3 net interest income exceeded expectations due to faster loan growth, strong deposit flows, and the ability to originate loans at higher yields than anticipated. Additionally, the potential for loan sales in the fourth quarter may reduce the risk of a near-term capital raise, while efficiency is improving more rapidly than expected and student loan refinancing originations outperformed expectations. Shifting to the healthcare sector, Beam Therapeutics experienced a notable surge of around 22% in pre-market trading following its announcement of an agreement with Eli Lilly. This agreement involves the sale of certain rights to gene-editing drug candidates that Beam is developing in collaboration with Verve Therapeutics. Specifically, Lilly will acquire product rights related to Verve's cardiovascular in vivo gene-editing programs targeting P9 Karuna and ANGPTL3 genes, as well as a third undisclosed cardiovascular disease target. In return, Beam will receive an upfront payment of $200 million, along with a $50 million equity investment. Furthermore, Beam is eligible to receive up to $350 million in milestone payments through this partnership. This agreement marks Eli Lilly's continued exploration of gene editing, following a previous deal with Verve to advance a preclinical in vivo gene editing program. In the biotech sector, shares of CRISPR Therapeutics were put on hold for trading as an FDA advisory committee convened a significant meeting to discuss the approval status of a gene-editing candidate developed in collaboration with Vertex Pharmaceuticals. The gene-edited therapy, known as Exaccel, is currently under FDA review for the treatment of severe sickle cell disease, with a target action date set for December 8, 2023. The FDA's Advisory Committee on Gene Therapies convened to discuss the biologics license application for Exaccel. Although their recommendations are non-binding, the FDA typically considers them before making final decisions on authorizations. If approved, Exaccel will become the first FDA-cleared gene-editing therapy in the United States. Turning our attention to the technology sector, Palo Alto Networks has made a significant move by acquiring the cloud security startup Dig Security for a reported $400 million. Dig Security specializes in data security posture management, providing organizations with tools to identify, classify, monitor, and safeguard sensitive data stored in the cloud. This acquisition underscores Palo Alto's dedication to expanding its cybersecurity offerings in response to the rising demand for digital security. The cloud security market is projected to reach $76 billion in 2023. With the global cybersecurity market experiencing a 12.5% year-on-year growth, totaling $18.6 billion in the first quarter, outpacing the broader tech sector's performance. Palo Alto Networks has expanded its market share to 8.7%, marking a growth of 23.6% in the quarter. Earlier reports had indicated Palo Alto's interest in acquiring both Dig Security and Talon, both based in Israel. Dig's capabilities will be integrated into Palo Alto's Prisma Cloud platform, bolstering real-time data protection from code to cloud, especially as companies increasingly migrate more of their data to cloud-based systems. And that's it. We hope you enjoyed this video. Don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!